Man, fintech has not been looking good lately, and all I've been doing on the channel is uploading videos about fintech. Should probably pick a different sector. Or I could research a whole new fintech and then maybe go in on that. Yeah, alright, we're doing this again. Today I'm giving myself 24 hours to make a decision on Robinhood from a beginner's perspective all the way to having a full decision on the business on whether to buy or sell based on the financials. We got a lot to cover, so let's go. Okay, so we're starting out with nothing and we're going to start the whole research flow right here. So first we're going to go to investor relations, financials, quarterly results, earnings presentation. So we're starting with the presentation to get a strong understanding of what we actually should be looking at for our thesis and what we should be looking at as someone who's just starting to understand Hood. What? How is the growth this strong? I mean, this is ridiculous. I was looking at the stock price real quick today, and it dropped like 50% in the last 6 months, so I just don't understand what's going on here. Whoa, and this might be the most impressive thing here. I mean, they've really been able to keep adjusted operating expenses quite flat, even with the growth that we've been seeing. And we might see this 20% year over year, but I mean, even from like 2021, we're seeing this pretty much flat growth in operating expenses. Shoot, and I didn't even see this. In 2022, it obviously had quite a toll on the business, cutting total platform assets and cutting the total net revenues of the business. Okay, single-digit growth in consumers, but gold growth, wow. I mean, this is really strong growth. 5 points on an absolute basis of the actual consumer base using gold. Although I'm just beginning the research here, there are 2 things that I know about Robinhood. First off, I know that Robinhood Gold costs $5 a month. And second off, I actually know that most of the business is going to be making money from payment from order flow. Net depots, I mean, this is great because quarter 4 is just not great for the markets at all compared to the last few years that we've been having, but depots are still coming in. I guess the traders aren't that degenerate after all. Okay, so we're here about the priorities of the business. We're looking at prediction markets, and this seems to be their number 1 priority. So I guess we're gonna have to see about that. Okay, super app. I guess that's kind of broad, but if they're trying to just have a stronger ecosystem, that makes sense. And Cortex, and this is actually going to have traders understand in a much deeper way what the market actually is and how to actually understand it, do research, and make strong decisions. I mean, it's going to make investing and trading a lot more accessible, I feel like. I think that this should be really strong for just getting more people to be on the platform in general as well. And it's going to be available only to gold members, so that should increase the amount of gold members, or at least just increase the immersion into the ecosystem. And social, like social media, is a built-in Twitter-like social networking feature within the Robinhood app. That's really smart, because I mean, there's a lot of people on X, Twitter, whatever, and then stock twits and Wall Street Pets. I mean, think about all the people that are actually just going to be posting on Robinhood. I mean, that's a huge opportunity, one I haven't even thought about. That's a great idea. Interesting. So we have Robinhood retirement accounts now, and the growth really has been astounding. Up 2x in just a year. I mean, that is really, really strong. 26 billion in total retirement assets. And just look at the growth in the amount of accounts, and then look at the growth in assets per account. And you know what this actually means is that Hood is no longer broadly a group of degenerates. And this is actually tracking the number of retirement accounts. And so while we have less than 7% of total accounts actually having retirement, it's increasing a lot faster than the growth of total accounts on the platform, which it means it's not just a bunch of new, older consumers coming in and then building retirement assets with Robinhood. It means that there's actually people who've been with Hood for years and then building up a retirement account just now. This means that traders are actually starting to think more about their future rather than just trying to like instant gratification options into being a millionaire. And we see that Hood users don't really just have like $1,000 to trade with anymore, and they're actually making the investment into the platform to continue using Hood into the future. Yeah, so I mean, this is what I was talking about. Look at the growth of gold here. I mean, it's just so steady. So many people are realizing that gold is the right option for them, and that's just because look at the value that you're getting from gold. There really is just so much that you're getting that if you have like 5,000 in your account, you probably should have gold. Compared to our average funded consumer, Robinhood Gold sub. Okay, so this shows that once a user gets gold, they're really being integrated into the ecosystem. I imagine that they're probably reasoning, okay, I have gold, which means I've made an investment into having this investment account, so I should be putting more assets here. I mean, that or like a Robinhood user without gold has like $20 in their account. And look at this. I mean, Robinhood is already taking up such a large share of the market. I mean, it really is just illustrating the fact that the young traders of today are just going to be the investors and traders of tomorrow. Okay, so this is going to be the trading volumes that we're seeing for Robinhood. And look at that figure for crypto. It's doubled recently because of an acquisition, it looks like, Bitstamp. So we're gonna have to look more into that and see why it's driven such a large increase. Okay, here we are to total transaction-based revenues, and I don't know if I like how much in transaction-based revenues are being made up of options in crypto. I mean, this is a really large portion, and this is certainly a cyclical business. I mean, we've lost roughly 130 million in transaction-based revenues from Q4 24 to Q2 25 during the recent crypto drop. That shows that, I mean, this is a really highly cyclical business. Okay, so now net interest revenues. This is going to be interest from services such as the credit cards, certain lending, cash sweep for treasuries to invest for consumers, and then like margin interest. But what I'm seeing is that margin interest is actually making up almost half of the total net interest income that we're making. That's a little concerning to me because margin interest is definitely more speculative in nature. Okay, so we got pretty much everything that we wanted to see here, but before we go on, why don't we take a look at the different analyst predictions that we have for the business. Whoa, looks like analysts are really positive. Average price target of 116. Upside 70%, and the lowest price target is like around what Hood is trading at. So I mean, that means humans are really bullish on the business, but the market's just not feeling the same way, I guess. Let's see if I can find any more evidence about why we're so positive. Whoa, this is something I haven't even thought about for Robinhood. The great wealth transfer, which is going to be the older generations actually handing down money. That means that a lot of this cash is actually going to be directed to millennials, which is the median consumer age for Robinhood, 36. So, I mean, there's going to be a lot of money going to the people who actually use Robinhood right now. And I imagine that they're going to want to invest some of this money, and that leaves a lot of opportunity for Robinhood. A key competitive advantage. We are a technology company. Yeah, we'll see about that. In fact, why don't we allow your own revenues to show the story? And look at the amount that transaction-based revenues are making up for the business. And here we see that 59% of everything is going to be made up of options, crypto, equities, and other, which appear to be prediction markets and some instant withdrawals. And to understand why this actually is, we have to understand payment for order flow. And what payment for order flow actually is going to be best explained by seeing how much money Robinhood is actually paid to service your trades. Okay, so here we are on the 606. And before we realize how much Robinhood is making from payment for order flow, we have to understand what it actually is first. Okay, so real quick, big market makers want to be the middleman of the market, not taking on more risk than they have to while staying neutral and flipping shares as they pocket the difference between the price. The problem is that hedge funds and traders often have more information than market makers do. So the market makers don't want to have a lot of volume with the smart guys. So Robinhood suggests that they can have the much less educated retail traders be a source of liquidity for the market makers. This means instead of your shares actually being transacted on the stock market, they're being bought or sold directly to the market making firms. And these firms pay Hood for offering these less educated traders for liquidity. So how does this impact traders? Basically, you get a slightly worse fill if we take into account the idea that market efficiencies would drive price for a better fill order for you. If you don't get any of that, don't worry. All you need to know is that the market makers are paying Hood to receive your trades because they don't want to trade with the big dogs. Now, this can actually be a benefit for traders depending on their account size and trade frequency, but we won't get into the math of that, and it's actually something we'll get into later. So this is actually interesting, and these two columns just represent whether you're going to be taking or creating liquidity, and it's going to allow us to understand how much market makers are actually paying for Robinhood to allow for these retail traders to give them liquidity. So this is for non-S&P stocks. So every 100 shares that are traded, this is equities. In equity, you're going to be paying 12.5 cents, 13.8 cents for Virtu. And then if we look at options, that's where the story really starts to come together. Look at how much you're paying for options. It's a large amount. For Citadel, we're looking at 46.58 cents per contract because option contracts are 100 shares. But what this allows us to understand, it just doesn't make sense for Hood to say that they're a tech company. I mean, they're really just a brokerage that also has banking services. And the only reason why they say is a tech company is because they hope to earn a higher multiple on the stock market. And also what we're seeing here is that options is making them the most money on payment for order flow, which, I mean, I guess that makes sense since options were making the most money on those payment for order flow stats. And what we're seeing here is that actually 45% of the total revenues that the business is doing is coming from just options and cryptocurrencies. This makes me think that the business is highly cyclical, meaning that when volumes get high and there's hype in the market, Hood is going to be having a heyday, but once strong market returns normalize, trades should also. And there's no doubt that we've been on a strong run and that this market has been very strong recently, and this could definitely be a cyclical shift for the business. Alright, and I'm looking at the fall of Robinhood now, and it's really starting to make sense to me why this actually is happening. The markets have been flat, if not falling, over the same time frame, and then the Bitcoin market, I mean, it's just been so much worse. And if we're thinking about the fact that 45% of the revenues are coming from these more speculative positions, it makes sense why we have been seeing such a strong drop in the shares of Robinhood. Now, you may have known this and you might believe that because Hood is largely aligned with crypto and you believe that crypto prices have gone down recently, that as they go back up, Robinhood should also trend back up. But also, please cite in your analysis that we've been in a really strong cycle for Robinhood. So just keep that in mind. It's not to say anything positive or negative, but I think that's something that you have to understand and be aware of when you're trying to make a decision about Robinhood. Okay, and then other income. We've seen such a strong increase in other income. Why exactly is this? Oh yeah, because it's those prediction market incomes. Wait, so I'm confused on prediction markets. Are they gambling or not gambling? Okay, so it seems like they're kind of in a gray area right now. They're not really being defined as anything. There's kind of a fight to be defined as whether they're derivatives or whether they're actually gambling. So as we can see here, we can actually see how much it costs to get a license in each one of the states. And I just had AI go through this, and it looks like it's going to cost like 20 million to be able to get all the licensing fees to be able to gamble in each one of these states. And this is actually something I don't really want to go into too much. First off, because I just have no clue at all whatsoever whether prediction markets are going to be thought of as derivatives or gambling, which is part of the reason why I allowed AI to just do this. And I think that honestly, if you have any insight on whether prediction markets are going to be gambling or not, you probably have a better bet betting on Kalshi about that rather than buying or selling Robinhood shares. Part of the thing that I want to talk about is that I think if prediction markets are defined as gambling, Robinhood is just going to completely disregard them, because that would completely lean into the idea that Robinhood is, a degenerative gambling platform. And also, it's just going to take so much time, so much money to invest into having all these gambling licenses. I just don't think it would make sense for the business. You know, we've been looking at the incomes for the strong cycle right now, but what happens in a weak cycle for Robinhood? Holy, well, yeah, it's just as we thought. Transaction-based revenues bombed during the 2022 fall off, the crash during that time, and seems like crypto is leading the charge with 52% decrease. Oh, and equities 59%. Wow. Guess crypto wasn't leading the charge. Though it's actually important to note that during this time period, Hood was able to get closer to profitability, but the decline still shows how reliant Hood is on strong volatility on the markets. This is a concept that I've actually just kind of realized, and I'm going to use just retirement accounts to illustrate this point. But I'm starting to realize that people are paying for this order flow, which is fine for these smaller accounts. But once these accounts grow in size, what does that mean for the users? Because eventually the account size gets to the point where payment for order flow options are just bad for trading and investing, meaning that you should find users actually leaving the platform as they realize that they're losing out on potential profit. This should be a natural problem as accounts mature, and they should realize that they're missing out on money. And this would lead to mass migrations, so this is something Hood is going to have to adapt for. And you know what? This actually could be something that we're seeing soon because of the increase in assets that we're actually seeing with Hood. And I think in the end, this is going to be the most important idea of what's going to be allowing Hood to grow into the future. If there's more assets on the platform, that means there's going to be larger volumes of trades in a dollar measurement. There's going to be more interest income earned as people borrow more and begin to have more money for other services. And there's going to be an increase in the amount of gold subs, which should happen if assets under custody grow faster than users, meaning the average balance as a user's account increases signals gold would bring more value to them. So if we're trending to have more assets under custody, that means Robinhood Gold is going to be more valuable to the average user. So what should happen to the gold sub in the long run? Shouldn't the growth of Robinhood subs as a proportion of the total user population continue to trend up? And why is the price so cheap for all that you're getting with a subscription? Surely Hood must know that they're giving users a flaming deal with this. That as the consumers have larger account balances, they're going to rely on Hood services increasingly, thus the price should go up in the long term, once we already have a large proportion of the user base using. Wait, and if we're increasing the total assets under custody for the business, shouldn't the users need to borrow more money as their account balances increase? This should be supported by both accounts growing and new deposits coming to these accounts. So why don't we run a bear, a base, and a bull case to see how the business would be impacted? So in the bear case, let's say the market underperforms over the next 10 years, and then we have a little to no net deposits happening. So 5% CAGR makes sense to me. Then 10% as a base, and 15% for the bull case. And we see the incomes that we can expect from the interest yields, and clearly this is some strong growth in these segments. But still, this doesn't solve the problem that a lot of the revenues of the business are being focused on instruments focused on short-term profits rather than long-term mindsets. Crypto being such a large portion of the income just makes me nervous with how volatile the markets are. Wait, but why have we been seeing such strength in the growth of the crypto markets for Robinhood? We saw Bitstamp a little in this video, but this acquisition is something Hood deserves some kudos on. Payment for order flow is banned in the UK and restricted in the EU, meaning that Robinhood just does not have a lot of access to this part of the world, but Bitstamp allows us to have crypto exchange licenses through that business segment all across the EU, meaning that we finally have access to this market and should be expanding our relationship here. This means Bitstamp was a bridge to the EU, and this is allowing us to actually expand our services over there. Now Vlad's vision is really starting to make sense. It still does concern me how much of Robinhood's revenues are being focused into crypto, but I think that this acquisition is really a smart play, and they paid around 200 million for it, and honestly, at that point, it almost seems like a deal. And even though we're having this heavy reliance on crypto, Vlad is really trying to move revenues and spread them out over more products and services. So we for sure know that over the long term, the key indicator of strength is going to be the growth of the total platform assets, but I think over the short term, what's going to be a signal of growth is going to be the growth of gold subscribers, because this is actually going to show that consumers are becoming more integrated within the Robinhood ecosystem. And it shows that consumers are going to be more often using Robinhood in their day-to-day lives and becoming more long-term focused, which is a huge sign of strength. I think Robinhood should have one goal over the next few decades, and that should be to keep depots and grow depots. And this is done by deepening the relationship with the consumer. And well, this is what Vlad has to say.
First, active traders. We want active traders to feel like they're at a disadvantage trading anywhere but Robinhood.
So I don't know what you think about that, but I certainly think that he has the correct vision for the business. One thing I would want to see before I'd even consider making a position in Robinhood would be an indication that they're willing to provide brokerage services that are beyond the current payment for order flow that we're seeing now. If we can get services that are going to offer better fills, then I think it's going to be a huge win for Robinhood. And this is only because I think account balances are going to get large enough into the future where people are just going to figure out that they are losing big dollars on payment for order flow. So whatever this needs to be, we need to find a way to allow people to move out of the service as their accounts expand. I think you all are going to appreciate this final idea. In 1996, Charles Schwab found that some 50% of its new accounts had never traded stocks before, compared to just 5% in 1987. There was a huge influx in 1996 of new traders, new people who wanted to have access to the markets. Much like in 2020, around that time, people wanted to start trading on the market, started investing on the markets. When you have such a large influx of people who are new to trading, new to investing, it allows you to have people who are really excited and really immersed into the idea, becoming stronger earners, investors, and providers. And I'm not here to say that Charles Schwab and Robinhood are the same thing, but I'm just saying that what might be seen as a beginner today is going to be a master in the next 30 years. All right, my friends, looks like we got through a lot of research. We got a lot done in 24 hours, and I should be going a little bit deeper on Robinhood into the future, so make sure to have notifications on, and I'll see you guys soon.